Hello, you're tuned into Reimagine 2020, hosted by Mousebelt. My name is Tyler Olsson. I'm the University Program Director at Mousebelt. And joining us today is Alex Soong of Set Protocol to tell us a little bit about Tokensets and what he thinks about the future of DeFi. And also joining us is Mousebelt University Program Assistant Director Roshan Mirajkar.
Hey everyone.
How is everyone doing today?
Good to be here.
Good. So, Alex, like I said, I would like you to tell us a little bit today about Set Protocol and Tokensets and some of the issues in DeFi that Tokensets strives to sort of help us wrestle with. But before that, maybe you can say a little bit about your background. What's your story? What led you into the crypto sphere?
Yeah, sure. So a little about me. I've been an industry professional here in the Bay Area for about 10 years now, just bouncing around various companies. I like to call it the Silicon Valley tour. Worked at companies like Zynga, Apple, and most recently Square. And at the end of that, I was grappling with a couple of different domains, one of them being open finance. I originally didn't really buy the Kool-Aid. I wasn't necessarily participating in all of the early ICOs. I wasn't an early buyer of Bitcoin. What really drew me to the space was really understanding the evolution of the tech stack, right? They keep talking about this idea of Web3, and having seen sort of the cloud stack evolve over the 2010s, I was really eager to learn about what the new Web3 architecture would look like. And so it was interesting, like, what does it really mean to add a public blockchain as a finality layer into whatever product you were building? And that sort of took me down, my own rabbit hole of just trying to solve new technical challenges within the space. Your common understanding of how modern applications work is you have a back end that serves some information to a front end, which then drives some kind of product value for the end user. But in the Web3 stack, as we try to present the value of self-sovereignty, you'd really have a much more of a triangle looking stack where you have users who are interacting directly with the finality layer through the client. And then so you can think of the back end as now serving an entirely different purpose. And this sort of blew me away. And I was like, well, there's a good opportunity to not only explore it, but seeing as how it's still so nascent, there's an opportunity to shape the way that evolves and to continue to bring some of the best practices from my previous experiences to this new tech stack and way of looking at system architecture. And so at the time, one of my co-founders, he is the one who is like, the buying Bitcoin in 2010 and whatnot, and trying to convince me over the years to buy it and look into it, and I just wasn't a believer. But we were really looking at the space and trying to see what kind of value people would be able to get from applications built on top of these layers. And since there was this whole ICO craze, we were thinking at the time that people were really just trying to maximize their exposure to every little coin, right? They weren't doing a lot of due diligence themselves. It was really about how do I increase my surface area to all of these tokens whose white papers sound good, who are raising a ton of ICO money and whatnot. And so we're thinking, okay, well, there are obviously financial instruments in the existing financial industry that allow people to do that. And so we started off with the idea of just doing a token curation. So we would be able to basically bundle a number of these different assets as long as they conformed to the appropriate token standards. We would be able to wrap them into one tradable digital asset. So think of it like an index, right? And so we were thinking just doing simple curation. Like, for instance, if you were really bullish on the idea of DEXs in the future, you would buy a set comprised of DEX tokens, right? You're thinking like Kyber, AirSwap, 0x, things like that. So, that all seemed to make sense, right? People were just rushing to buy into that space. And so we set out to build that system of smart contracts. And by the time that we had completed it, obviously it was like, the beginning of 2018, and everything just sort of froze over, right? People were realizing, hey, before a lot of these tokens are actually going to start accruing value to the holders, the teams actually need to grow out their protocols, really garner more usage, which, even, or as of then, was really just like, there's a very small very small number of users who are even interested in learning MetaMask and learning how to interact uh, with the blockchain in general. And so people started to realize that it would be a while before any of these projects would really lift off. And so what you saw was people were actually contracting their positions back into just Ethereum and Bitcoin. And a lot of it was just waiting to see what would happen in the space. And so obviously, we had to evolve because, the game was no longer just getting exposure to every little coin that was out there. And so what was interesting was at the time, back in 2018, there was also the rise of stable coins. So now, you had, this new class of assets that could be put into our index wrapper, as we call it, and that would allow people to accrue value. And so we said, okay, well, how do we sort of accrue value for users just using these two assets? And so we evolved over time into what we call now a asset management protocol. So we have a token standard called the rebalancing set token, which, as you would expect, behaves as a index that rebalances between different types of collateral at the choosing of a operator or a manager. And so one of the first products that we built was a rebalancing set that basically rebalances in and out of Ethereum based on the price of Ethereum. And that would do it without requiring the user to take any action. So it would behave as you would expect some kind of index product. And so, from there, you can think of Set Protocol as the system of smart contracts that facilitates this asset management. And you can think of Tokensets as the first consumer dApp that is then built on top of this system of smart contracts. And so this is the way of us showing users, how our smart contracts can be used. We're obviously dog fooding our own developer libraries, our own smart contracts, and just sort of planting those ideas in people's minds of, what other possibilities are out there. And I think that's important. That's an important step for protocol creators to take these days, versus just putting out a protocol and, where there's an incredible amount of complexity and saying, okay, now go build something on top of my protocol, right? You really have to show them what the value is first to really get those creative juices flowing. And so Tokensets is our own consumer dApp that consumes our smart contracts, our developer libraries, and showcases a number of different strategies. And so using our own developer libraries, we enacted a number of strategies that we call Robosets. And so these are sets that will trade in and out of volatile assets based on technical indicators. So some of our most popular products today include sets that trade based on the relative strength index, or the RSI, or we have ones that are traded based on moving average indicators, like the 20-day simple moving average or 26-day exponential moving average. And so that really just represents a asset that moves differently from the market, right? Because what you saw in the market, for most of 2018 and 2019 was, the whole market tends to move in the same direction. And so people were interested in assets that would behave differently, based on your particular investment sentiment. And so we really set out to create a number of assets that mapped to as many users as possible. People who were interested in doing more than just speculating, or I think as Roshan was mentioning earlier, doing more than just lending, right? Lending was also a hot topic in 2018 and 2019, but now I think people are sort of opening their eyes to, what other possibilities there are when you build on top of a layer like Ethereum.
Yeah, so it's almost like hang on, let's just back up a little bit. Set protocol is a protocol built on top of the Ethereum network, and that's more or less the sort of rule set, or the sort of rule pattern, which helps you facilitate and sort of process certain types of automatic
Correct.
Sort of processes that will help you issue certain kinds of transactions. And then Tokensets is an application that is sort of built on top of that protocol, and it is a way of helping you take something like your Bitcoin, and then you can break it up into a variety of assets. Maybe you could explain that a little bit more about exactly like what are the sets that I'm getting into, and what are my options when it comes to making adjustments to like the ways in which those assets get traded in and out.
Yeah, so there's two classes of products that we have today. The first is the Robosets, and so taking a step back. A set is always a collateralized basket of digital assets. So if the set allocation is currently 50% Bitcoin and 50% Ethereum, then you know that those digital assets are locked up in a smart contract somewhere. So it's always 100% collateralized. Otherwise, it would be classified as a synthetic, where you're sort of using something else as collateral to ascribe value to that asset. But for us, one of the axioms of our system is a set that is issued is always 100% collateralized, and that collateral is locked up in a smart contract vault. Okay. So the two classes of products that we have today are Robosets and social trading sets. So with Robosets, you are buying an asset. Let's say today the composition is 100% Ethereum because you're feeling particularly bullish. But this asset will then rebalance into 100% USDC whenever a trigger condition is met, such as the price of Ethereum has crossed under the 20-day moving average. So if you subscribe to technical indicators such as 20-day moving average, you believe that the market sort of follows this trend where the 20-day moving average price dictates whether or not you should be bearish or bullish, then you would buy one of these products, because that will then help you accumulate more Ethereum over time. So you can imagine you're attempting to buy low, sell high repeatedly over and over again, versus just holding Ethereum and letting it speculate up and down without you, or if you're the kind of person who attempts to time the markets but is not sure when to do it, you could rely on these products to automate that for you. And so the rules for our Robosets are written into those particular smart contracts, and they are reinforced by a number of on-chain price oracles. So it's not like we're able to tell the sets when to rebalance. It's they follow on-chain price oracles that then, when they see the signal, they say, okay, it's time to initiate a rebalance and rebalance into USDC or back into ETH. So now the second class of products that we have, and the ones that we launched earlier this year, were now, instead of having a smart contract decide when to rebalance, we actually put another user on the other side of that set. And so we went out and we found traders from around the world, people who are either managing their own funds, or have deep trading view histories, who are then able to feed those signals to the set to decide when to rebalance. So maybe they have their own proprietary algorithm based on whatever indicators they're consuming, and they now have the ability to kick off that rebalance. So now, instead of relying on any kind of on-chain indicator, you're relying on this trader who has, essentially staked his reputation, and through a set of fixed smart contract interfaces is allowed to dictate when these sets rebalance. So, maybe they have an algorithm that consumes 20 different indicators, right? So maybe they'll trade the top a little bit faster than the 20-day moving average Roboset will. But either way, you're relying on their wisdom and their expertise to decide when to rebalance. And so that really represents the evolution of our protocol, where we eventually open that up and have multiple players, right? We originally, when we launched the Robosets, we were the set creators, but now we're enabling other people to be the traders on our platform.
Yeah, and you can like customize the sets that you want to
exactly
work with. Mm-hmm. But it seems like it sort of like widens up the options that you have when it comes to what sort of indicators you want to pay attention to, and it's all sort of handled through smart contracts, so that once a sort of an indicator is met, then it will just kind of like deploy the sort of rebalancing like according to whatever you set it to. So it's
correct.
A way of making algo bot trading accessible to the sort of not so technical analyst or something like that.
Exactly. And so, yeah, that really represents, I think, the future of where the space is going, where we can really start to challenge some of the existing dogma in the space of, maybe people are better off being able to trade 24/7, right? Maybe people, subscribe value to self-sovereignty and being able to get in and out of funds like this whenever they want versus having to go through an institution. These are all ideas that we're exploring by building on a public layer like Ethereum.
Right. Like, do you see that this is a promising route that our financial paradigm writ large is going to take, or do you think that it's just going to remain a sort of niche thing, maybe even for the next decade to come? I mean, what are your thoughts on that?
I think it's going to be slow to move over. I mean, there's instruments that are being traded today on existing financial markets that just aren't replicated on Ethereum right now. That's going to take a considerable amount of time. But assuming all of those mappings do happen, there's no reason to believe that there's more value in participating in the current system, right? Like, for instance, take our traders who are trading their pools. We call those our social traders on our site. They're really able to trade 24/7, right? Versus someone who is participating in existing financial markets. Like, why is it the case that they're only able, their trading window is 5 days a week? From what, 6:30 to 1 p.m., right? Like, it should really be, it really makes the market more fluid. Now, from the user perspective, that this idea of self-sovereignty and being able to pull your funds in and out whenever you want is also extremely powerful, right? Like, when you interact with protocols like ours, you have the ability to determine when, even on a weekend, you're not waiting for any kind of transaction to necessarily process through an institution. You're just able to execute a transaction and pull your funds out. So it really is a win for everybody. And when you combine these two things together, your intuition should be able to come to the conclusion that there should be way more liquidity on a platform like this than any existing centralized exchange. So I think it's one of those things that's going to take time, but people are slowly starting to warm up to the idea, and you're starting to see that as there's more value being brought on chain, we're able to draw in more users, more traders, more market makers. And so it's a process. I think only time will tell, but I think I'm extremely confident that the value props outweigh the current challenges with technical complexity.
Yeah. No, I mean, I'm extremely bullish on decentralized finance for the future, and I think that sort of this is a real opportune time to open up a lot of discussions about that, because you see a lot of funny business going on with, for example, the US dollar, right? Where you have a central entity that thinks that they can just print as much of that as they want to kind of like artificially uphold, things like the stock market or, like the US economy. But I think that those types of actions really just prolong the same thing to happen over again, and very likely in a sort of worse way. So the idea of actually getting peer-to-peer networks off the ground where people can contribute to pools where on the back end it's being sort of dished out to people who want to take collateralized loans, and then sort of coming back to you in the form of interest, which is of course live interest, right? It's sort of fluctuating on the basis of actually how many people are sort of in need of the loans, and how many people are actually willing to contribute to that sort of lending pool. I think that, markets should be more responsive to real-time supply and demand principles, as opposed to just leaving it in the hands of those authorities who think that they know what's best, when, really all that leads to is those people who have their hands in the cookie jar just paying themselves the most, right? So, so yeah, it's really interesting to hear.
If there was a time. Sorry, go ahead.
No, please.
Yeah, I mean, if there was a time for everything that's going on in this space to shine, it would be now, right? Yeah. And there has been a significant uptick in, I think, interest and usage of our networks during this time, because as you said, people are very uncertain about where the U.S. dollar is going.
Yeah, and that just kind of circles us back around to where you said you started. You weren't really pulled in by the temptation to sort of launch your own ICO and raise a lot of money and just dish out a lot of empty promises in the form of vaporware, right? So it's so it's nice to know that there's still some purists around who are, as it were, in it for the tech, because I think that it's people like yourself that are putting their nose to the ground and, really doubling down in hard times like the last couple months, and sort of building the types of applications like what you're doing with Tokensets. It's really promising to hear that there's people that are in it for the tech, because I think that that's ultimately what's going to lead the space to succeed.
I think the challenge with the space early on was that people over-indexed on the idea of self-sovereignty, and I think they wanted to build protocols around that much too early, right? Before people were willing to see what the actual value propositions were for using a platform like Tokensets or any of the other protocols in the space. Teams were focusing way too much too early on governance, right? And it's like, are you willing to buy into a system that has very little functionality as long as it preserves self-sovereignty? And I think a lot of teams who did ICOs, who haven't got off the ground, are starting to ask themselves like, okay, well, maybe we need to focus on creating value first, while keeping an eye on self-sovereignty, and then slowly moving towards that direction. But I think if you had a traditional product background, you'd be much more interested in working with your users to see, hey, what is it that's actually going to get you to transact on Ethereum? And after 2 years, it's somewhere in the middle towards the bottom of the list, where self-sovereignty is, right? And I think it's one of those things where like people don't see the advantage of it until you have a system that is of a certain size, and you need to make those decisions like the ones that the feds are making, and then you want to be able to have access to whatever it is that your value is at the time they make those decisions, whether based on whether or not you agree with it. But at the very early stages of building anything, I think it's hard to justify focusing exclusively on that.
Right. And not to mention, the sort of difficulty of identifying a real, genuine use case, right? Because as you just mentioned, maybe it's not the case that everything we think that we need a distributed ledger for, or everything that we think that we need a blockchain for, actually needs it, right? And it's about sorting out the different use cases and like the different social practices which actually thrive and are sort of operate more efficiently with self-sovereignty in the sort of more decentralized model, and which ones actually work more efficiently when you have, maybe not one centralized governor, but at least a few. And I think that that's sort of in the last 2 or 3 years has really been what has defined a lot of the projects in the space is, backing up, taking a more patient sort of peer review, critical approach to these things, asking the fundamental questions that really need to be addressed in order to build protocols from the ground up that are going to manage all the things that we want them to manage, not just now, but 50, 100 years into the future, right? And I sort of get that governance is a sort of really crucial issue in that respect. But I think that question comes side by side with a lot of other ones having to do with, as you pointed out, practicality, right?
Yeah.
So
yeah,
it'll definitely be interesting to see where we go from here. Well, Alex, I think that's all the time that we have right now. I would like to thank you so much for taking the time to tell us a little bit about yourself and a little bit about Set Protocol and what you're doing with Tokensets. And feel free to reach out to us if you ever want to chat more about DeFi, or if you ever have any new exciting projects in the works.
Sounds good. Thank you so much for having me.
All right, Alex.
Stay tuned to learn more about the state of blockchain education at major universities all around the world. Reimagine 2020.